Dear valued investors, welcome to Market Insight BRI Manajemen Investasi. In this session, we'll explore the latest market updates and uncover emerging trends to help you make informed investment decisions. United States Zone. Minutes from the January 2025 FOMC meeting showed that the Fed kept the Fed funds rate at 4.25% to 4.5%, pausing its rate-cutting cycle after 3 reductions in 2024, as policymakers took a cautious approach, favoring a restrictive stance if inflation remained high while considering easing if economic conditions weakened, emphasizing the need for more disinflation evidence and highlighting risks from trade, immigration, geopolitics, and strong household spending. The second estimate of Q4 GDP growth will be released this week. According to the advanced estimate, the U.S. economy expanded at an annualized 2.3% in Q4 2024, the slowest growth in 3 quarters, down from 3.1% in Q3. The monthly growth of personal income and personal spending for January will be released, with expectations of 0.4% and 0.2% growth, respectively, compared to December's growth of 0.4% and 0.7%. The US and Russia have started talks to end the war in Ukraine, discussing possible territorial concessions and Ukraine's neutrality, while Russia demands control of occupied regions and Zelensky's removal, raising concerns among Ukraine and its European allies. Indonesia Zone. Indonesia's trade surplus widened to $3.45 billion in January 2025, from $2.0 billion a year earlier, exceeding expectations due to a surprising 2.67% drop in imports, influenced by a weaker rupiah, lower purchasing power, and holidays, while exports grew 4.88%, marking 10 months of expansion, but at the slowest pace in 7 months. Indonesia's loan growth slowed to 10.27% year-on-year in January 2025, the lowest since November 2023, with investment and consumption loans rising 13.22% and 10.37%, respectively, while working capital loans grew below the industry average at 8.4%. The Bank of Indonesia kept its benchmark interest rate at 5.75% in February 2025, aligning with its strategy to control inflation within the 1 to 2.5% target and stabilize the rupiah, which remained relatively steady despite global volatility, depreciating only 1.06% year-to-date, while inflation eased to 0.76% in January, its lowest since March 2000. Indonesia's current account deficit narrowed to $1.15 billion in Q4 2024, 0.3% of GDP, the smallest shortfall in 7 consecutive quarters. Though the full year 2024 deficit widened sharply to $8.86 billion, 0.6% of GDP, due to weaker foreign demand, strong domestic consumption, and a declining trade surplus, yet remained within the central bank's projected range of 0.1% to 0.9% of GDP. The growth of the M2 money supply for January will be released soon, while in December it was recorded at 4.4% year-on-year. As long as growth remains positive, it indicates that consumption activity is continuing on a positive trend. Market view. The Jakarta Composite Index (JCI) rose to 2.48% week-on-week, closing at 6,803,001, marking its first weekly gain after 3 consecutive weeks in negative territory. This week, JCI is expected to remain in positive territory, supported by global data. If the second estimate of Q4 2024 GDP US shows weaker growth, It could boost market optimism that the Fed will still need to cut rates. On the domestic side, positive M2 money supply growth for January would reinforce confidence that consumer activity remains strong. Foreign investors recorded a net sale of 1.04 trillion Indonesian rupiah over the past week, bringing the year-to-date outflow to 10.97 trillion Indonesian rupiah. The three best-performing sectors were technology, basic materials, and industrials, which gained 20.24%, 5.90%, and 3.24%, respectively on a weekly basis. On February 21, 2025, the yield on the 5-year benchmark government bond FR0104 flattened at 6.50%. The yield on the 10-year benchmark FR0103 also remained flat at 6.75%. Similarly, the yield on the 15-year benchmark FR0106 held steady at 6.99%, while the yield on the 20-year benchmark FR0107 increased to 7.02%. Meanwhile, the yield on the 10-year Indon bond Indon 35 remained unchanged at 5.31%, while the 10-year U.S. Treasury yield was flat at 4.43%. Compared to their levels on February 14, 2025, which stood at 5.36% and 4.48% respectively. Indonesia's risk premium, as reflected by the 5-year CDS, remained stable at 70.68 basis points. Additionally, the rupiah depreciated by 0.38% week-on-week, closing at 16,309 Indonesian rupiah. As of February 20, 2025, foreign ownership in the government bond market stood at 895.63 trillion Indonesian rupiah, 14.58% of the total outstanding, an increase from 886.82 trillion Indonesian rupiah, 14.45% of the total outstanding on February 7, 2025. The Fed is expected to cut interest rates twice, totaling 50 basis points in 2025, after lowering the benchmark interest rate by 100 basis points in 2024. The U.S. economy remains on track for a soft landing, with growth projected at 2.5% year-on-year in 2024 and 2.1% year-on-year in 2025. Similarly, Bank Indonesia is expected to implement an expansionary monetary policy in 2025, which is anticipated to positively impact Indonesia's economic growth. The bond market is likely to respond positively initially, driven by improving macroeconomic conditions, followed by a strong performance in the JCI. That concludes today's Market Insight. Stay tuned for more updates and follow us on social media. See you next week in the Market Insight BRI Manajemen Investasi.